Good afternoon. Well, let's have a look at what was happening from the Asian side of things. A mixed performance on that particular front, with the Chinese stock market the biggest gainers there. This is on the back of hopes of more policy support from the authorities. Nonetheless, the Nikkei in Japan up about 1.2%. The Hang Seng Index in Hong Kong up 0.6%. Meanwhile, we are expecting the European Central Bank to announce its policy decision in less than 15 minutes. They're expected to continue with a speedier withdrawal of stimulus. This as they battle with some of the risks to the economy and the Ukraine-Russia crisis. Nonetheless, we are going to be keeping tabs on that particular front. And we also had Wells Fargo release their quarterly numbers showing that they've missed estimates, saying that they are expecting credit losses. To talk to us about the market dynamics as they play out, we are joined by Jones Gondo, who is from Nedbank CIB. Jones, thanks so much for your time. Let's talk about the drivers here when we look at the Asian market performance, as well as the activity we saw on Wall Street overnight.
Yes, thank you. Starting with Asia, you mentioned it, that the expectations are that the People's Bank of China will ease their credit conditions to allow a stronger recovery or bounce back from the lockdowns that they've had. And hopefully the expectations that supply chains will get going over the next quarter. From the US overnight, I think the US futures opened up, at least our market opened fairly flat. And I think the market had shrugged off the latest inflation prints. Perhaps we could say that it was priced into the index.
So one of the announcements that came out on SENS this morning relates to Thungela Resources, saying here that Transnet is considering changes to agreements as the rail woes persist. Now, in the morning, we saw that share price down about 2.9%. As it stands right now, down 0.6%. Is this something that we should be worried about? And just to correct it, it's actually down 6%. Is this something that we should be concerned about, especially as we deal with Transnet and the ongoing system issues?
Yes, I think this is one of the structural issues in our economy that we've been worried about for a while now. I think directly for Thungela and other coal export partners, the force majeure that Transnet has had continues for at least for the next 6 months. And, basically it's almost like missing another commodity upcycle where we can't get the volumes out of the country, although the prices have been rallying. So I think it just dampens any expectations of improved earnings and volumes going through the ports.
One of the other issues we have been talking about are the devastating floods in KZN. And as a result, yesterday afternoon, SAPI and PEPCO releasing updates to the market, talking to us about the extent of damages, experienced at either SAPI and PEPCO. Should we be expecting more companies that operate in that region to be giving us further updates in terms of the extent of damages? And also, I suppose, how the share prices recovering following yesterday's announcements?
Yes, so we've actually had two other companies at least report. That was Maersk Shipping, as well as looking at Toyota. They had also halted operations, and Toyota's pretty much an anchor investor into that region. And would expect also other firms, particularly banks, retailers that are operating in affected areas to close down their branches and operations there. So just the general slowdown in economic activity in the affected areas and supply chains into some of these major investments into the region. We will certainly, come after Easter and start to piece together some of the costs of the impacts, and then that will start to be priced into individual company stocks. But for now, we saw quite a big impact in insurers overnight.
Right, and as you do mention there, as it stands, the insurers, Old Mutual down 2.7%, Sanlam down 0.8%, and Discovery also in negative territory, down 2%. But let's move things stateside for a bit. I mean, we are expecting U.S. earnings season. We've just had Wells Fargo releasing their numbers, missing estimates there. What are you expecting from a U.S. earnings point of view in an environment of hot inflation?
Look, I think the inflation running as hot as it is, we expect the response from the policymakers to really ramp up the rates market, and so we're expecting that by May it'll be a 50 basis point increase from the Federal Reserve, and this has an impact on banks in terms of the expected credit losses that will come through their balance sheet. So we already saw with JP Morgan that they also put in some provisions for high credit losses, and we expect that in general across all portfolios. I think what has been the more sort of mixed feature has been pricing in some of the dislocations from the Ukraine-Russia conflict for some of the balance sheets. Thinking of what's happened with commodities, hedges, as well as the defaults on and exclusions of Russian assets, business deals, as well as bonds from indices. So for the different banks with a different focus, particularly looking at Goldman Sachs, they will come through with impact on the M&A earnings, and other sort of Citi and Bank of America should look at their trading books and see how they fared through the volatility. And so revenues generally are expected to be down, but the features of the components of revenues will certainly be mixed.
Jones, thanks so much for your time. That is Jones Gondo, who is from Nedbank CIB. And just to add to that Wells Fargo announcement, missing first quarter revenue estimate, that share price down 3% in pre-market trading. Well, that is it from me. We'll have more of your market news back